Hi everyone. Today is June 27th, 2025. Let's take a look at the portfolio, how it's doing. We're going to talk about some options, some stocks, and some dividends. So first, let's get an overview of how we're doing today. It's pretty flat today. Down a little over percent in the past week. 2.39% past month, up 5.84% past 3 months. But past month, been pretty flat, not much activity there. Let's see. So let's start with these options. So recently I had several put options that I had sold expire worthless. So what that means is when I got into those deals, somebody on the other end paid me money to take on that risk to be able to be forced to buy those options or forced to buy those shares. But the price never went below those strike prices, so I never had to buy them. So after the expiration date, then that money was freed up and I'm able to do the same strategy again and go after selling some more puts on some more different stocks. So you can see here pending orders. Some of these have not executed yet. I put these in last night as an order, but no one's biting. So that Ulti $5 put, you can see the bid is $0. The ask is 5 cents. I can't get any lower than that 5 cent mark because that's how they trade. They trade in increments of 5 cents. Can't get any lower than that. So let's look at this other one. QQQY. Our range is between 5 cents and 20 cents. I put in a bid at 20 cents saying, hey, does anyone want to buy this for 20 cents, a contract? But no one's biting yet. But what I can do is just replace it and go 5 cents lower. See if anyone bites on that one. Replace order. Okay, so this QQQY, I put it in for 20 cents, but we can replace that. And if we're willing to go lower in the dollar amount we're willing to receive, then this might be able to get filled. So I'll click on that. And I'll click on replace order with a 0.15 and we'll just try that. So it's saying I'm agreeing to buy 100 shares of triple QY for $25 each before on July 18th, which is that expiration date. And they'll replace the order, and if I'm not asked to buy it by then, I'll keep the collateral and the full $15 credit. Alright, let's try it. Pending, placed, not filled yet. So this is kind of a lower volume option chain here. That's okay. This will expire at the end of the day. Let's see. Oh, this one's popular. Let's replace it with 25 cents. Review, swipe up. I got pending, filled. Yep, so this one's really popular. Oh, it is a REIT, R-E-I-T, and they pay out dividends monthly. They're real estate investment trust. So REITs are forced to pay out dividends. I think most of them pay out monthly. Alright, some pay, good old pay. Let's see, replace order. Maybe it'll fill at 15. I kind of doubt it, but we can try. Click review, swipe up, pending, Oh, it got filled. All right. Yeah, so it doesn't hurt to try the very next increment down and level of what you're willing to accept as payment for this, instead of going all the way down to whatever the bid is. You just drop it down by 5 cents, wait a minute, see if anyone bites, and if no one's biting, you can always drop it down more, or try again tomorrow, or just try something else entirely in general. Great, so that's all we can do with those pending orders. If those aren't filled by the end of the day, they will automatically cancel, because these are only good for day orders. I think that's the default. All right, and you see positions held for options. These are pretty recent. All these puts I sold. See those strike prices. If this underlying stock drops below that price, I will be forced to buy 100 shares of it, which is good because I do want to get into these stocks so I can turn around and A, receive the dividends, and B, sell some calls on it so I can get some call income on those. Here's the bear, iron. This one, you can see at the top left, current price is $13.87. It blew past my lower strike and my upper strike. This one is a total loss. See that break-even price, $10.07? Simulate my returns. As I move towards expiration, which it expires today, my total loss is going to be like $7, $15. Which, this one, total bust. That's my max loss. It will be that max loss. But if I tried to close this today, two things would happen. I'd have to pay over $1,000 just to close it. I already checked. And on top of that, it would count towards my day trades, which I also don't want. So we'll just have this be a lesson in why options are risky, because you never know when the underlying stock is going to move against you. That's all right. It happens. Dividends. So with Robinhood Gold, I'm getting 4% APY. Interest accrued this month is about $5. I looked at my interest payment from last month, May, and it was roughly $5, which gold costs, I think it costs $5 a month. So already the cash in my account earning interest is paying for Robinhood Gold, which is pretty cool. Some stocks. I did sell some basically loser stocks, or ones that had been sitting there a while. I wanted to get rid of them. So let's see. Yeah, some of these pharmaceutical companies, you can see I got into them. They weren't really doing anything. And some of these, I either made a little bit of money or lost a little bit of money. They're pretty close to break even. I just want to get out of them, free up some more cash, and kind of focus on this options and dividend strategies I have going on here. Yeah. So let's see here. So I had some cash freed up from that. And so what I kind of changed strategies here also with DRIP, dividend reinvestment, where it's automatic. So I looked at some of the stocks and ETFs I had, and this is currently showing last price. So actually I have a list of the dividend paying stocks. Where are we at here? Yeah, so I made a list, and these lists I manually made. So all these guys in here, all these should be paying dividends. Sometimes companies stop paying dividends, so you'd have to go through here and double check what's going on. But some of these, if they were dividend paying stocks such as Ulti, right now we're at $6.20. Basically, if anything was like a reasonable amount that I could buy 100 shares of, then I turn the drip off for that. So a new strategy I'm trying is any of those pretty much under like 30 bucks and below. For example, this one, if I was forced to buy 100 shares of this, I would pay out 620 bucks. For example, if I sell a put, I'd have to pay out 620 bucks. And but then I would acquire 100 shares, and I could then turn around, sell some calls on it, 1, and 2, receive the dividends from it, and then all those dividends from these, relatively lower price stocks, I could collect those, pull it into one spot, and then reinvest it into another stock by selling a put. And you'd have to do 100 at a time. Okay, so for example, you can look at this TPVG triple point. So one strategy we could do with this is have that dividend drip turned off. Right now it's off. And all those dividends from the higher price stocks will reinvest into themselves, but the dividends for these lower price stocks will just pool into a the main cash account, and then I could use that and then focus on buying 100 shares at a time through the process of selling puts. So that's the new strategy I'm trying out with that. If you found this video helpful, go ahead, give it a like and subscribe to my channel, and we'll see how this portfolio does in the future. Best of luck to you.